Real estate is for tax and it's for long-term wealth. So it's where you go to have savings in tax and have long-term wealth, not accumulation, but preservation. So we go there to skip the IRS and we go to real estate so that long-term I have more safe assets. Stock market we do to beat inflation. So we want 10% sort of max per year. That's why we invest in the stock market. Neither of these two things, unless you have a ton of money, are going to make you rich.
Right. Let's get 20 million in one of them.
Exactly. Then you can, if you have a ton of money, these two things are great, which is why most people who are really, really wealthy own a ton of this after they've made their money.
Yes.
The only way that you're really going to make your money is by starting or buying businesses. And so, in my opinion, this is where you put the $250,000 to $500,000 because you can have an infinite return on it.
Yeah.
You can't make real estate make you 50x return in 1 year. I mean, unless you have some crazy deal. But in buying a business, you can.
Yes, so I almost 100% agree with this video, right? So the tax treatment between you owning and starting a business compared to what happens with real estate and stock is extremely different, right? Real estate is where we're buying an asset using mostly debt. We get an asset that then brings us a bunch of depreciation and offsets our income if we have the proper structure, right? Either a real estate professional or short-term rentals. There's ways around it because you don't want to be capped by the passive loss limitation. But essentially, real estate allows you to preserve that wealth after you've created it. When the money is there, it creates tax write-offs that you can use to offset the rest of your income.